where I'm going to start, I'm gonna kind of go back to front here and start with Iran, and then show you a few little things. What I will point out, okay, obviously, if you're a profile trader, there was a very, very neat strategy that coincided, obviously, with the earlier comments. It was a break of that 69.50. Now, if you've done the profiling course, we call this the fill of the single prints, and we can see, obviously, once the market broke down below that 69.57, we really got a stop run of initially 30, 40 ticks, and then obviously the market cottoned onto the CNN reports that Trump was going to potentially not walk away. But again, the strategy remains the same. We play for the breakout of that 69.50, which is protected. That initiative is protected by those single prints. Once obviously the buyers are no longer willing to protect it, we should fill out those single prints, which is ultimately what we have done. Now, what I would say is don't be surprised to come in tomorrow morning and see the oil trading in a range between 04s and 50s. Okay. When a market leaves these sorts of single prints or these low volume areas and it trades them through, it does have a tendency to turn them into highly traded areas. So keep an eye on that sort of range tomorrow. Don't be afraid to play within that range early on in tomorrow's session. Okay, in terms of the rest of the week, what I'm going to say for oil is there's a really key opportunity now in oil, and it's got to do with the positioning. Okay, we know obviously with regards to the very aggressive down move we saw that the market is sensitive to the downside. Trend is firmly up, medium, long term, short term. We are in price discovery mode. But do definitely keep an eye on that low made, over the CNN comments at 67.61. If that goes, you're going to see a bout of profit taking, and most likely we're going to take out this pockets of lows here all the way down to 66.90. So again, we will be looking for breakouts below that 61, targeting a break of the 92s. So if you're a breakout trader, this is something you got to be prepared for. Looking for breakouts, good 60, 70, 100 tick rewards, with relatively straightforward risk. So keep an eye on that in oil. To the upside, again, a smelly little high they made today. Not a good high. Most likely that high is going to go. Like I said, tomorrow morning we'll be looking for an early break of those 70.40s to take out the 70.84. But so important, okay? Don't be surprised to see, like I said, a very volatile range tomorrow. So if we fail on the 70.84s, don't be afraid to sell it on the way back down. Targeting somewhere around that 69 area where we had those sets of single prints. Okay, and then gold. I just want to briefly touch on gold. And the best way to explain gold is to show it to you on a profile. Okay, this is last week's range on the left side, and you can see we are smack bang in the middle of last week's range. It's Tuesday afternoon, evening, and we can see that it's a very muted range. Okay, so it's a very, very sideways market, which means that the potential for volatility is not going to come inside of last week's range. It's going to come once we begin to extend upon either the current week range, okay, which is now sitting at 20s at the high and 06s at the lows, but it's not going to come at the high, the current prices. So what I'm trying to say is that when you get a 30-minute chart up of gold, right, the real key little areas are either we break down today's low and we take out that little ledge at 04s, 05s, okay, and we maybe even test last week's low at 1302, or ultimately we take out the high mat on the week, which is at 1320. Until then, okay, if I scrunch this up and you look for the last 4 sessions, until then, this is what we call a real bad sideways market. Okay, so there's a real lack of opportunity. We can see that also with a low volume. It's been 4 low volume sessions now in a row, in the gold market. So, if you strip out obviously that bar that was on non-farm payrolls, there is a lack of intent, a lack of intention and initiative being taken in the gold market. So right now, it's as simple as wait till we get to the 6s, play for the break, look for the extension, look for the aggressive follow through. Likewise, wait for the 20s and look for the follow through to the upside. Until then, expect a lot more sideways. Okay, so that's kind of what you want to look at over the course of the next couple of sessions.